So actually, just looking at the market here, we're off about 100, but still hovering near record highs. I know you just talked on a panel about the U.S. trajectory. Where do you guys see us in terms of the market cycle right now?
Well, I think it's clear that the U.S. is in a period of sustained growth. It's not what everybody would want, but it's sustained growth. And that has been, I think, underpinned from a market standpoint by the recent trade deal. And so we've got clarity on Brexit. We've got USMCA. We've just had the first phase of China-U.S. trade. And I think the market is anticipating that really one of the challenges to the economy over the last 2 years has been international trade. And with all these developments, I think the market's anticipating that international trade is going to recover, and therefore the economy should actually grow faster than it has. Even
though we're already in, what, an 11-year economic expansion?
Well, I don't think that economic expansions die of old age. They die of excess. And we don't see excess to any major material degree in the economy. And so we think it can continue to grow. It's not going to grow as fast as people would like, but steady, slow growth is just fine.
What does that mean for you guys at Carlyle and what you see as far as investing opportunities right now?
So actually, steady, slow growth is not so bad for us. The interest rate environment will stay low as a result. Asset prices will stay high, so that's a challenge. And so you have to work awfully hard to find things to invest in. But one of the things we strongly believe in is when you have specialists and lots of experts inside a firm, you can find good things to invest in. So slow growth means that companies are going to divest things. Disruption means they need capital to grow. Governments that may not have as much surplus cash that they want means they need private capital to invest in airports and other infrastructure. And so I think one of the great benefits of being in a firm the size of Carlyle is we have a lot of talent. The talent is specialized, and it's helping us find really interesting things to invest in.
Still, there's that, more than $1 trillion wall of cash sitting on the sidelines in private equity?
That is true. That is true, and it's more than we've ever seen in the industry. But I think counterbalancing that is the fact that there's been a big shift from capitalization from public markets to private markets. So there's far more private companies today. Companies are very happy staying private for a long period of time. And so again, while it's not easy, we continue to find good things to do.
Well, and your stock has done remarkably well. I think more than doubled last year. How do you see that? Is it, well, I mean, so many of these private equity firms, obviously you converted into a corporation.
Yes.
How much of it do you think is that?
Well, I think there's a meaningful portion of it is the conversion. I think the other part of it is we performed very well. The conversion was important. I think for many years we suffered from, oh, we're good at what we do, you should buy our stock. And what we recognized is that we, in fact, needed to come up with an ownership security that was actually more shareholder friendly. And I think it really does reflect a broad view of who we work for. We work for our investors and our funds, our shareholders, our employees, and our communities. And as a result, this redefinition of Carlyle's ownership, and I think we came up with a pretty unique structure. We went all the way to a full corporation. So everybody has the same share. There's great transparency, and investors have really supported us.
So you're kind of getting at this whole theme of stakeholder capitalism, which is front and center here in Davos. What are you hearing from your investors on that?
Yeah, so the great thing is we have two very vocal sets of investors, one that are in Carlyle as a public company, but also the ones that have supported us for over 30 years. And these topics are incredibly important. It's not just making money, but it's actually taking care of companies the right way, their communities. Many of our investors like for us to report back to them the progress we're making on ESG, because every company has an ESG plan. And that holistic approach is far more the norm today than anybody would have anticipated 5 years ago, but we've run to it. We started sustainability initiatives about 9 years ago and have found ourselves very well placed at making a difference in the portfolio companies that we own, driving ESG initiatives, and as a result, creating value from it. And that's actually quite reinforcing.
Some wonder if it's a bull market phenomenon. You know, as long as the economy is doing okay and stocks are going up, it's fine.
Right.
We all want the world to be a better place. What happens, though, in a downturn?
Well, I will tell you, Sarah, one of the things that we have firmly embraced, because it happens to be true, is that when you are making good decisions holistically at a company level, then not only do you drive economic performance, because, oh, by the way, if you bring your energy footprint down, if in fact you have a much better supply chain, if you reformulate your ingredients, if you have better packaging, then guess what? You're actually going to sell more of your product and you're going to have a better economic outcome. And so they really are reinforcing. We've also found that on the talent front, that while a lot of people talk about diversity and inclusion, I think if you start from the perspective that better diverse thought results in better outcomes, and then drive from better outcomes, you by definition want a diverse workforce. And so we've really been on this bandwagon for, as I said, 9 years, and we're seeing a lot of progress. I mean, half of Carlyle's AUM today is managed by women.
Which surprises me.
It shouldn't. I mean, this is part of, I think, the workforce that will get the best answers. And so I think this trend, which is getting a lot of airtime here, is one that a lot of companies like Carlyle have really been pressing for a while.
The other trend here, and what we're all trying to figure out, is how the political landscape evolves over the next few months and years. Many leaders here facing re-election. Private equity, are you guys bracing for attacks from the left?
Bracing's a strong word. I think we recognize that what we do and how we do it isn't holistically understood. The economic value of private capital and how we not only can drive transformation in companies, take good companies and make them great, but all of the ancillary benefits of supply chains and communities. And we just have not done a good job helping people fully understand that. I think we're doing a better job now. I think I look at what we're doing in New York around JFK. And by the time we're done at JFK, we will have created 5,000 incremental permanent jobs. We will have trained up a whole community to run the airport. And we've created a sustainable workforce. That's great,
but everyone thinks that you're getting a sweet deal on taxes. So what are your expectations if we do see an Elizabeth Warren or a Bernie Sanders, or really a lot of the leading candidates have plans to tax you higher?
Well, I think they won't just pick on us. I think that the whole tax code will come under some scrutiny and some adjustments. And I think holistically, if we do end up with Bernie Sanders or Elizabeth Warren and a majority in Congress, that we'll see some changes to the tax code. It's okay. We don't work to save taxes. What we do, we work to actually create value, and we'll pay taxes, whatever the taxes are due.